Renting versus buying a home is always a big question many people face. We all want to own a home someday, but it feels almost impossible with housing prices in Australia at the moment. The average house price in Sydney is around $1.4 million. If we use the average household income of $120,000 and an average household saving rate of 3.2%, it will take,
wait for it,
96 years to save up for a 20% down payment of $280,000. Even if you manage to save 32% of your income, it will still take nearly 10 years. So you might think, I'll just keep renting, but then there's always that worry of missing out. In this video, let's talk about all the costs of renting versus owning a home so you can figure out what's best for you. To compare apple to apple, the cost of home ownership has to be the sinking cost that you never see again. The home's value shouldn't be counted towards this cost because you will end up with the home's equity when it's totally paid off. Renting is pretty straightforward. You pay rent to your landlord every month. For example, if your rent is $3,000 a month, that's $36,000 a year that you'll never get back. Let's look at a case study. Meet Mr. and Mrs. Jones, who live in Brisbane. They are currently renting for $627 a week, which is the average weekly rent in Brisbane. This means they are spending about $30,096 a year on rent. Now, they are eyeing on the 3-bedroom house that costs around $800,000. We assume they have saved up for the 20% deposit and are able to cover all the upfront fees too. So what are the costs if Mr. and Mrs. Jones decide to buy this house? There are upfront costs and ongoing costs. And since we're comparing renting to buying, we'll also consider the opportunity cost. Basically, what else they could do with that money if they weren't using it to buy a house. First, let's talk about the upfront costs. When you buy a home, there are several upfront costs that you need to cover. These usually include stamp duty, potential lender's mortgage insurance (LMI), legal fees, building and pest inspection costs, mortgage application fees, and registration and valuation fees. Stamp duty. This is a tax charged by the state when you buy a property. The amount depends on the property's value and various other factors like whether it's your first home or if you're buying it to live in or as an investment. For the house Mr. and Mrs. Jones want to buy, the stamp duty will be $21,850. Lender's mortgage insurance (LMI). If you can pay at least 20% of the property's value as a deposit, you can avoid this cost. Otherwise, you need to pay LMI, which for our example would be about $34,000. But since we're assuming the Joneses family has the 20% deposit, they won't need to pay this. Legal and conveyancing fees, and this covers the cost of a solicitor or conveyancer to handle the legal paperwork. This usually costs between $800 to $2,500. We'll budget $1,000 for this. Building and pest inspection costs. Before buying, you need to make sure the house is in good shape and free of pests. For a 3-bedroom house, this typically costs around $450. Mortgage application, registration, and valuation fees, and these include the cost of processing your home loan application, registering your mortgage, and getting the property professionally valued. So adding it all up, Mr. and Mrs. Jones need to pay about $24,000 in upfront fees that they will never see again. And this upfront fee averaged out over 20 years would be $1,200 per year. Now, moving on to the ongoing costs. The biggest ongoing cost would be your mortgage payments, which include principal and interest. But here, we will only factor in the cost of borrowing, the money that you will never see again. For the Joneses, their principal is $640,000 using NAB's mortgage calculator with an interest rate of 6.59% over 20 years. The total interest will be $528,497, averaging out over 20 years is $26,000 per year. Homeowners usually need to have the home and contents insurance unless they live in an apartment under strata title in Victoria. According to CanStar, the average home insurance cost in Queensland is about $2,800 per year. Next, council rates. This is a property tax that you pay to your local council. The rate depends on the value of your property and the cents in the dollar rate set by the council. For example, if your property is valued at $250,000 and the cents in the dollar rate is 42 cents per dollar, you pay $1,050. For the Joneses home area, we'll budget $1,600 based on the average council rate for Manly West. Next, maintenance fees. This can range from big expenses like renovating a kitchen to smaller costs like fixing a leaky faucet. Generally, maintenance costs can be up to about 1% of the property's value annually. For this 800K home, that's around $8,000 per year. The total ongoing cost of owning this $800,000 3-bedroom house will be quite significant. So let's add up all the unrecoverable costs. $26,000 per year for mortgage interest, $2,800 per year for insurance, $1,600 for council rates, and $8,000 for maintenance. The total cost of home ownership will be about $39,000 per year. Every decision we make has a hidden cost called opportunity cost. And this is basically the profit that you could have made if you had done something else with your money. In our case, by committing to mortgage payments, you miss out on the chance to invest that upfront money elsewhere, like in stocks, which could potentially give you better returns. Adjusted for inflation, the 30-year average annual return of the S&P 500, including dividends, is 7.74%. The Australian stock market, ASX 300, has an average annual return of 7.32% after inflation. Meanwhile, the median Australian house has appreciated about 5.4% annually over the past 30 years, which after accounting for 3% inflation is 2.4%. So if Mr. and Mrs. Jones invested their $183,000 upfront cost, the money they had before purchasing the property in the S&P 500 instead, they could earn $11,000 more per year. Or if they invested in the Australian stock market, they could earn $9,000 more per year. And this difference is the opportunity cost of buying a home. Alright, if you're still with me, let's add everything up. The total upfront costs that the Joneses would never get back are $102,000 per year. All the ongoing costs, including the cost of borrowing, is $39,000 per year. Then we factor in the extra profit they could have earned if all the upfront fees plus the 20% deposit were invested in Australian stock market, $9,000 per year. So when we add it all up, the cost of buying a home will be around $49,000 per year. You might have watched some videos about buying a home in the US or Canada where they use a fixed percentage of the property value to estimate costs, but this method doesn't quite apply to prospective Australian homeowners. The reason is that in Australia, different states and territories charge various costs differently. For instance, legal and mortgage application fees can be roughly the same amount regardless of the home price, making these fees a smaller percentage of the cost for more expensive homes. This issue also shows up in the mortgage interest, where mortgage repayment follow an amortization process. Towards the end of your loan, you pay less interest, so the average annual interest rate Mr. and Mrs. Jones pay is only 3.3% instead of 6.59%. I can't just round this cost up or down to a simple percentage because they're not linear. But don't worry, I've created a free Excel sheet that you can play around with to see how these numbers work out. Back to our case study, the yearly cost of buying an $800,000 home is $49,000. So if Mr. and Mrs. Jones are currently paying $30,000 in rent, it might seem more rational to keep renting. But does that mean buying a home is a bad idea? Not necessarily. Many people see buying a home as a form of forced savings. At the end of the day, when you pay off the mortgage, you own a property. And remember the opportunity cost that we talk about? How many people would actually take the money that they save from renting and invest it in the stock market? On the other hand, renters who are actively investing their surplus cash might not realize the extensive list of costs involved in buying a home. It's a lot to consider, and it's important to weigh all the factors before making a decision. In finance, we can have all the formulas to work out a number to make a rational decision, but in reality, it's not always that simple. Humans are irrational. Having the best, most accurate number doesn't mean that we'll make the best decision. So, if you were in the Joneses' shoes, given the numbers, would you buy a home or keep renting? Let me know in the comments area.